The Taxpert Car Planner 2022 will help you to advise clients on what the tax and NI consequences are of being provided with a business car, either if you're a sole trader or if you're an employee or if you're a company director shareholder. And I've tried to make it as simple as possible in terms of the data being input and the output, but behind it, it's hugely complicated because of all the different elements that go in. And what I've included in all of this calculation is the vehicle excise duty, car benefit rates, mileage rates, all the rest of it. And you can see the cash flows and the data and so on. But let's just look at the simple elements. We input on the main input screen, company name, the individual's name. I've got HMG Limited, R. Sunak, employee tax band, and there might be higher, there's a drop down there, basic or top rate of tax. So that's the profit extraction rate if it's an owner managed business. Put in the business mileage, put in the private mileage per annum. Down here, if there's a capital contribution for the employee, private use payments, in certain scenarios, that'll come up yes or no for salary sacrifice. The salary sacrifice isn't revealed unless we've made another selection. Is there a car allowance? Is there an optional remuneration allowance? What's the insurance cost? What are the maintenance costs? And then over here, you've got the make and model, Tesla Model Y, the registration number, the list price, accessories, CO2 emissions, fuel type, electric. If it comes down as, say, hybrid, there's then an electric range field that we have to fill in, maximum 130, because that'll affect the benefit in kind. But let's put it back to electric for the time being. And then if it's pre-owned, you put the date that it was first registered and the price paid if it was pre-owned. And then we've got the list price, of course, is going to affect the benefit, but the price paid will affect the capital allowances. Operating lease. This year I've included, because one of my delegates asked me to, a possibility of having an operating lease if it's an owner-managed business company lease. And if that is selected yes, then as you can see, it does change some of the input fields below, but we'll leave that at no. And instead of operating lease monthly rental below, we've then got the possibility of personal contract plan details and the amount of outright purchase finance if we're doing that. We put in the number of years, depreciation rate, maximum 5 years, start date, which can be between 6 April 21 and 5th April 23 inclusive. And then the end date will be determined by the number of years you put in there. Net present value discount rate, and I've already said that's going to be the monthly lease, operating lease rental if we've selected yes up there. Now, once you put all of that in, we then go to the second page, and here the key thing is to determine whether the analysis is for an owner-managed business or not. And the answer here is no. So what I'm looking at here is an employee. We can see at the bottom, that will generate an employee report and a company report. Whereas if on that comparison field, I had selected yes to OMB, then I've got a sole trader report and an OMB report. So depending on the selection there, we'll get different output. But let's go back to no. So if you're not an owner-managed business, we're looking at an employee company car analysis, and there are three alternatives. Should the individual buy the car outright, or should they have a personal contract plan, or should they take a company car? And the overall effect there for the individual is then summarized for each year. And a net present value comes up, and an average annual cost, and the average monthly cost or savings. In this particular scenario, there are some very significant differences. If the individual buys it outright, that's an enormous upfront capital cost, whereas if they have it as a company car, then it costs them virtually nothing. It's a no-brainer here, because of course electric cars are taxed as a benefit in kind in a very favourable way. If I were just to change the fuel type from electric to petrol, and put in CO2 emissions of, let's say, I don't know, 97, then when I go to the comparison, you'll see that we're looking there at a company car being more expensive than buying it outright yourself. Personal contract plan on the assumptions that have gone in stays the same, I think. So it does make a huge difference there, which is what I would expect. So we've got then the employee report showing the employee exactly what the annual costs and savings would be. And I don't need to look at that in any more detail. Oh, there's a page for key results that at a glance shows you for the 6 tax years covered here what the company car benefit would be, no fuel benefit because I haven't ticked that, what the capital allowances would be for the company, and what the vehicle excise duty would be on current basis. And then if you want to drill down, you've got, and it is wonderfully complicated here, you've got all the analysis of the calculations, personal cash flows, and then here the company cash flows, showing the various running costs, the capital costs, etc., the tax and national insurance, and all of that. Well, the workings beyond that show us how I've come to all of the figures so you can check them. This is the most complicated element. It's got the capital allowances. You can see there, and you can't read it, but you can see a capital allowance computation. I'll zoom in now at the bottom there. So that shows the capital allowances, and then I've got the data, and that's complicated. And if there is a loan, there's a loan repayment schedule. So a huge amount of work gone into working all of this out, but then simplified in terms of what the output is and showing at a glance, frankly, if I go back to that comparison, what would be better here. Clearly, if you can finance it, it would be the outright purchase. If I just go back to the input field, this was for a petrol car, where we were assuming the individual had the money to pay it up front. But if they were having to finance, say, 50,000 of that at an interest rate of 7%, I wonder what effect that has on it. Well, that does make the outright purchase rather more expensive than having it on a personal contract plan or a company car. So we can see what those figures do overall. And that is it on the company car planner. Quite a wonderful tool if you're having to give advice in that area.